Good afternoon, traders. This video is all about my trade tracking spreadsheet. I'm going to show you how to use it and how to get it. The easiest way to get this spreadsheet is to go to my YouTube Trading Armor trading channel, subscribe, then go over to the right-hand side of this banner here, click on the Facebook trading group page link. That's going to take you to the trading group page. You have to become a member, and that just gives you access to things like my trade tracking spreadsheet. I also have my 2R calculator, my trading plan. The file's not here yet, but as soon as I finish making this video, I'm going to upload it, so you're going to see it here. It is called the Trading Armor Day Trading Trade Tracker. And now let's talk about how to use it. So this is for the month of February. You can see the first day on the spreadsheet is January 31st, and that's just useful to give me a place to put my starting buying power and also all the formulas that I use. Some things you have to enter manually, and then other things are calculated for you. I'll show you all the details about that. So whatever your buying power is at the beginning of February, you're going to enter that in here before you start trading. Now, on Monday, February 1st, that's our first trading day. Let's say you take a trade. You're going to enter in the ticker symbol here. Let's just pretend it's XYZ. And the session that you trade in is the pre-market. You might be trading intraday or aftermarket. The setup, let's say you take an ABCD pattern. Could be a 3-bar play or a reversal, whatever you trade. Your entry, let's say you bought in the stock at $10.02. But you wanted to get in at $10 and maybe you got some slippage for some reason. Now the stop, let's just pretend it's $9. And let's say the trade actually went in your favor. And if you're doing 2R trading like I am, you're looking for 2 times your risk. And that's where the 2R calculator comes into handy. I already entered in the information. Let me just show you that from scratch. So you can see, so our actual entry was 10.02. And our stop was $9. So the profit target is 12.06. So let's say the trade went in your favor and you got out exactly where you wanted to. Maybe you did it right. You had to sell a limit order and it filled exactly where you wanted to. So that's your exit average. Your actual P&L, this is something that you're going to put in manually, and you're going to do it based on what your platform tells you. So I don't have anything here obviously with that value, but you're just going to look, let's say it's at XYZ up here, your P&L. In this case, it should show $20.38, and I'll explain why. And this is why I like to enter in manually. Let's pretend we had 10 shares. So 10 shares, and the difference here is $2.04. So 10 shares times $2.04 is $20.40, but your actual P&L is going to be 2 cents less because you had a sell order that you executed. Every time you execute a sell order, you get charged 2 cents from the government, right? And Webull takes that out automatically. So that's why I like to put that in manually. If you have multiple sell orders, there's going to be more sell fees involved, and that will be done automatically for you if you just copy the number here from the P&L. So you don't have to worry too much about that. I just had to calculate that manually for this example. Your cost is done automatically once you put in your number of shares. Click on this cell right here. If you see a value in any of these cells, that means there's a formula. And to let that formula do the calculation for you, you click on the cell, then you come down here to the right-hand lower corner, drag it down, and then just click on this little box, fill without formatting. That way it doesn't bring down any gray or red or green or whatever you have from the previous cell, and it calculates the cost for you automatically. So the cost of that trade was $100.20, and that makes sense. The return on investment, that's what ROI stands for. Click on that cell, do the same thing, drag it down, and it gives you the percentage of return. So you made 20%, 20.34% on that trade. And then your risk, your ideal risk, this is something you have to enter in manually. Ideal risk is based on your ideal entry and your stop, so that's $1. And then your actual risk is based on your actual entry and your stop, so that's $1.02. Percent risk, that's done automatically for you. That's based on the difference in the price from where you entered and your stop. And at the end of the month, you can see, wow, whenever I took, say, 5% risk, the trades worked out 99% of the time. And when I went over 10%, they only worked out 50% of the time. So that's the value of having that there. And then the 2R P&L, that's going to be dependent on whether the stock went to 2R or not. In this case, it did. So you're going to enter in a 2 and then drag this one down. It's going to automatically calculate what your 2R P&L is. Now you can see this is very close to this number, and that's because we actually held to 2R in this case. But let's say you weak-handed the stock, and of course the only reason there's a difference there is because this doesn't include the fees or commissions that you might have. So that's why that number's slightly different. But that could be very different if you did not do the right thing and you scaled out. Maybe you got a little bit scared or whatever, and you didn't do the right thing. You started scaling out of the position, and you ended up with $8.50 instead of $20.40. And that's the beauty of having this value here and these calculations done for you. If you scale out, then you see, wow, I look at how much money I left on the table. If you do that enough times, you're going to get really good at holding to your profit target. So let's just change that back so that all this data makes sense. So we put in our trade, and let's say we only took that one trade. If you took multiple trades, you would do the exact same thing. And then go over here. In this case, I'm going to have to calculate the buying power automatically since this wasn't a real trade. But what you would do is just go over here and you look at the buying power. It's going to update automatically. But in this case, I have to calculate it. And once I add that $20.38, the new buying power is $545.37. So that's what this will say automatically. Go back over to your spreadsheet. It'll update that number manually. Then your daily P&L, that's done automatically. That'll take into account as up to 6 trades. We only took 1, so that's why that's the exact same number as our P&L. This is done automatically. It shows you your percent change on your account for the day. In this case, we increased the account size by 3.88%. And then 2R, this adds up all of the 2R P&L values. So if you took, let's say you took multiple trades, but you scaled out of them, then that's where you're going to see a big difference between these two numbers, and you'll see, wow, look at, what a mess I made. Instead of holding to my profit target like I should have, I scaled out and I left, $10, $50, whatever on the table. And maybe you actually ended up red on that day because of that, and then this would show you that you were green. So, maybe your day's red. You can click on that and highlight it red, but this is green because if you would have held to 2R. But in this case, we only took one trade, so the whole thing is green. So just highlight those, click on green. Now we can go to the end of the spreadsheet here. And once we have the whole week done, we can drag this formula down. Of course, we only have one trade here, so it's going to show us the exact same thing, but fill without formatting. Then these, if you want to clean this up, you just have to delete these one at a time, no big deal. And then your 2R P&L, same thing. And you get the idea now. If you would have scaled out, these two numbers would be wildly different. And it's always good to know, like, okay, if I would have done the right thing, what would I actually be making? And this is left over from before. But these are all updated automatically as you do your weekly sums. They're going to be, these numbers will update automatically. You don't have to drag anything anywhere. And then this, without yellow trades, this is something I find very useful. If I ever make a trade, if I take a trade that is against my strategy or my plan, I mark it as a yellow trade. And then at the end of the week, I calculate all of the trades up manually without the yellow trades. And then, maybe I come up with a different number, like, oh, I would have made $35 if I didn't take any of those yellow trades. And those numbers will get updated automatically down here. So at the end of the month, you could see, wow, if I would have stuck to my plan or my strategy, this is what I would have made. If I would have held every trade to 2R, this is what I would have made. Here's what I actually made based on what I did. So that's the idea behind all that stuff. And that's really it. I think we've gone over everything. I'm going to upload this. I'll delete all these values and upload this. I'll have to change those to white. But yeah, so I'm going to upload this to the Facebook trading group, and you can download it immediately.